Hi everyone, I'm Chad Shoop, and welcome to this week's edition of Bank It or Tank It. This week, we're going to do something a little different. Instead of looking at one individual stock, since we're near the end of the year, I decided that we're going to go ahead and study the overall market, and to do that, we're going to break down the S&P 500. So the S&P 500 is an index that compiles the largest 500 stocks listed in the U.S., and it's a key metric for anyone who invests in the stock market. So we're going to break down the S&P 500 in today's Bank It or Tank It to figure out whether or not we want to bank on the S&P 500 in 2020 or tank the S&P 500 in 2020. So as we look to break down the overall market, we're going to do so with the same three key areas that we do every single week, and that's the fundamentals, the sentiment, and the technicals. So we're going to look at the S&P 500 based on those three key areas and figure out whether or not we want to bank on it or tank it going into 2020. But before we jump into all that, I just want to give you a chance to scroll right below this video and click subscribe so that way you don't miss out on any of my upcoming Bank It or Tank It videos or any of my other stock market insights that I post on a weekly basis as well. So be sure to subscribe so that way you don't miss out on any of my content that I post. And once you're subscribed, you can click the bell to get a notification whenever there's a new video. Now, also, I've added a segment to today's Bank It or Tank It, and it's called Chad's Quick Takes. And basically, I'm going to run through a few stocks that you all have left in the comments that I haven't really gotten around to doing a whole Bank It or Tank It video on just yet. The last video was Cisco, and that was actually based on a comment that we got from John. So I was really thrilled to be able to use that as a Bank It or Tank It video. And as we get into the new year, we're going to feature more stocks that you all have commented on in the comments section that I'll use for a Bank It or Tank It. But for today, and meanwhile, until I get to some of these stocks that you all have left, I wanted to go ahead and give you my quick takes. So at the end of this video, there will be a segment where I'll run through several of those stocks and just give you my quick takes on what I think and whether or not we want to bank on it or tank it based on just a quick look from me. And since we're near the end of the year, I've had a lot of content that I've posted about 2020 and what I expect, and even my favorite strategy to use as we approach 2020 and how you're going to profit from the upcoming trends in the market. So if you want to learn more about those, about the seasonal indicators like the Santa Claus rally, the January barometer, and how the election year is going to play a part in 2020, I have links to all of that content right below this video. So make sure after this video, you scroll below and check out all our additional content in this section right below this video. So we're going to start with the S&P 500's Bank It or Tank It today in the fundamentals. And to me, the fundamentals of the overall market, the best place to look is earnings. So we're going to start there. We're going to dive in and take a look at how the S&P 500 earnings have been stacking up lately. Now, as soon as you look at earnings, you realize that the picture isn't all that great for the stock market, at least on the surface. When you look at earnings growth, it's actually been negative for almost 4 quarters now. This fourth quarter of 2019 is expected to be negative, and if so, that'll be the 4th straight quarter of negative earnings growth for the S&P 500. That hasn't happened since 2016, so we went through a nice stretch without having negative consecutive quarters of earnings growth. But some people call this an earnings recession because a recession technically is just 2 quarters of negative growth. So we're going through a negative earnings growth for the S&P 500. And that weakness is really portrayed in the stock market as subdued prices. We've seen that really when you go back to January 2018 up to October of this year, stock prices were flat. They went nowhere for about a year and a half. But now they're starting to turn around. They're starting to break out and go higher. And really that's a reflection of being a forward-looking in the market. They're looking ahead at what earnings are about to be. And after we've gone through basically 4 quarters of negative earnings growth, investors are really thinking that it's time that it's going to bottom. We're going to turn around and earnings are going to start to grow again. And that's why we're seeing the stock market turn around and push higher. So even though negative earnings growth having 3 consecutive quarters and maybe a 4th sounds negative, as long as we go through it without an economic recession, it's actually a very bullish sign for the stock market. So it doesn't concern me because when we look at the GDP for the U.S. economy, it's still chugging along. We're growing at about 2% clip, and that's not bad as long as we continue to growth, as long as it doesn't go negative, because again, 2 quarters of negative economic growth would be a recession. We get 1 quarter, it's just a blip on the radar, and it's not a big deal. We got to get 2 quarters before you start to hear recession and recession panic really take over. And right now, the 4th quarter is expected to grow at around 2%. So it's holding steady, and I expect that as long as we stay out of an economic recession, which seems to be the case, that this earnings recession is on the tail end, it's going to turn around, and we're going to see this bullish trend develop in the stock market. And just a couple other notes about the fundamentals. You can look at the Federal Reserve interest rates as far as it's going to dictate the U.S. economy. The Fed really, they're supposed to study the economy, but you can see by their actions and what they do that they also follow the market. And the market listens to the Federal Reserve. And they went through an interest rate hike cycle there in 2018, but then they started to cut interest rates. They went through 3 consecutive cuts. And basically what they're trying to do is have a smooth landing. And you don't see that often, but the Federal Reserve thinks they may have pulled that off. And that's going to be remarkable because when we see 3 interest rate cuts after a series of interest rate hikes, it's actually a bullish time for the stock market. When you look back at how this has played out in history, as long as they don't have to go through 5, 6, or 7 interest rate cuts because the economy is falling apart, then the stock market really starts to ignore it and starts to turn higher. So the 3 interest rate cuts are key, and we want to keep an eye on the Fed that if they have to cut again, that's going to be negative for the market. And if they have to raise rates, that should be okay as long as the market and the economy are really heating up and the Fed is just raising rates to slow it down just slightly. So right now the Federal Reserve is on the right side of pushing the stock market higher. And then we have the economic tariffs, the trade wars that have been going on that are starting to be subdued a little bit. We finally have almost a peace treaty between the U.S. and China, at least for further tariffs, and that's great news. And that's what kind of helped push the stock market to new all-time highs in the recent weeks. So that was great to see because tariffs, they do slow the economy. When you look back over the last year and a half, almost 2 years, the reason that we kind of had the volatility that we did and the slow prices was because of tariffs. So to get those out of the way and to get those to kind of take a back seat to some of the other economic news that's coming in, that's going to really help build on the fundamentals for the S&P 500 to let those shine. And as earnings turn around, it's all going to be kind of happening at the perfect time that I think that this is going to be a bullish sign as we head into 2020. So now let's flip over and we're going to take a look at the sentiment. And for sentiment, I have one key chart that I want to take a look at that tells me everything I need to know about the sentiment in the S&P 500. And it's a chart of the CBOE S&P 500 Volatility Index. So it's known under the ticker symbol VIX, and it's a measure of the expected volatility in the S&P 500 index options. So it's looking at call options and put options, and it's taking a gauge of those to create that index. And people refer to this as the fear index because when it spikes, you know that there's panic in the market. And I've done a lot of research into the VIX because it is a very important market measure for fear in the market and for volatility. But basically what I've discovered is that if the VIX is below 20, right now it's at 1258, but if it's below 20, the markets are really in smooth selling. So it's a bullish sentiment indicator when the VIX is below 20. When it's above 20 to 30, that's when you have a little bit of fear in the market. And it's time to reevaluate kind of what's going on. If you don't have protection on, that's not a bad time to do it because when you see the VIX push above 30, that's when there's pure panic in the stock market. And at that point, that's extreme bearish sentiment. And eventually there will be a reversal. But just because the VIX is high or low doesn't mean that we can expect an immediate reversal. I mean, look at what happened from basically 2003 to 2008 almost. The VIX almost stayed. I mean, there's periods where it jumped above it, but the VIX almost stayed below 20 that entire time. I mean, other than a few intervals of just sharp pops above 20. But other than that, it was pretty much smooth selling. And at any point, you could have been betting on volatility to increase and betting on this major correction in the market, but it just didn't come. Instead, it was one-off events, but otherwise the market continued to trend higher. And you can see now that we could easily be getting back into that sort of scenario. The VIX is low. People start to think that there's going to be an imminent reversal and that volatility is going to spike because it can't stay low forever. But in fact, when it's low, it's a bullish sentiment indicator. And when it's high, it's a bearish sentiment indicator. So instead of using the VIX as a reversal indicator, I use it to determine the sentiment in the market. And the trend right now is definitely bullish as the VIX is definitely below 20. Now, this is a sentiment indicator that's easy to track. You can pull it up almost anywhere online. Just type in CBOE Volatility Index. They even have it on the front page of CNBC most of the time, telling you what the current level is so you can know the current market sentiment and what it's telling us at the time. So right now, the VIX is below 20, so it's a bullish indicator. So now let's move on to the last piece of our analysis, and that's the technicals. We're going to take a look at the chart. So we have our chart of the S&P 500, and as always, I got a few things pulled up for us to take a quick look at. But before we jump into the key levels to watch, I want to talk about one other sentiment indicator, and that's the 200-day moving average. Now, I've talked about this in other bank it or take it's, and this chart is the yellow line. But basically, when you look at the 200-day moving average, if it's trending higher, which in this case it is, then that's a bullish scenario as long as the price is above the average as well. And that's what we have in this case. The S&P 500 is trading above its 200-day moving average, and both are trending higher. Now, prices for the S&P 500, they could pull back a little bit, they could slow down, but you can see that the average for the S&P 500 still has room to climb higher before it catches up. So that's a great bullish sentiment indicator, and it can come up acting as support even if we saw a major correction in the market. So it's nice to have that level below us when stocks are trending higher. Now let's take a look at the key levels on the chart. The major one is this red resistance line. This was a key resistance going back to 2018. So this level was extremely important. And when we saw it break out of that, this was a textbook rally, folks. I'll zoom in a little bit on the chart, but you can see that we had just a slow break out of it, and then it continued to climb higher. Then we had the pullback, the sell-off. People were taking profits, and it tested right on this resistance level, which is now turning into a support level, and then stock surged higher off of that. So that was exactly what you wanted to see. If you're bullish on the market, that was a great sign. This was a textbook rally, and now we want to look at how high this can go. How much higher can the stock market run after this bullish rally that we've seen? And for that, I just take a look at this recent consolidation pattern that we just went through. So you can look at the green trend line on the bottom. That was support, and this red resistance was the key resistance level, and prices were consolidating within here. So when you have these wedge patterns of consolidation, an easy way to get a price target out of it is to take the height of the pattern. So we can take a price measure and see that from the bottom to the top of this pattern is about 290 points. So what we can do then is we'll go and add that onto the top of the breakout. So let's add another 290 points to this breakout. And that's about right there. And I can make this bigger so we can all see everything. 290 points. And percentage-wise, that means that we're expecting a move of about, you can see about almost 10%, 9.5% there. But that's our move is almost 10% that we're expecting out of this, up to about 3,365 for the S&P 500. So right now it's about 3,200. So I expect to see it really move fast and hit this level through January and February probably. I wouldn't expect it to go much beyond that, because if you check out some of my other videos with the election cycle especially, that tells us not to expect much of a rally in the first part of the year. Instead, expect a little bit of consolidation. So what I think we'll see is the S&P 500 continue strong through December, then go through January and February on another strong note to end up around this 3,360 point level for the S&P 500. Then I think we'll get some consolidation for a few months before we get into the May, June. And during election years, those are actually bullish years. So it's opposite of the phenomenon sell in May and go away that you may have heard of. During election years, that tends to be a great time to see a stock market rally. So that's what I'm going to expect to see in 2020. And that is part of the reason why my price target for the S&P 500 is actually going to be 3,700. So once we get this first move higher to the 3,360 level, then I expect to see another move to the 3,700 level, which, as you can see on this chart, as I'll make it a little larger for you, is just about another 10% move. So we already have the first move built in based on the price consolidation that we saw. Our first expected move that I expect to see by February is about 3,360. Then consolidation, then another move higher as we get into the end of the year. And it's going to take a post-election bounce, which typically happens. It may or may not happen this year, but because history is on our side for that to happen, that's what I would expect to see as we get into the election process. And coming out of that in November, we'll see another bump higher for the stock market, and that'll be what takes us to the 3,700 level all in 2020. So altogether, we're really looking for the stock market to bounce from current prices just about 16%, I think. Let me make that a little larger. Yeah, 16% from now through 2020. So that's my price target. Those are my price expectations. So as you would have guessed, the S&P 500 is going to end up on our bank it list for today, because when we run through the checklist, We looked at the fundamentals and earnings. Even though they're negative, they're actually a bullish sign for the S&P 500 because the economy is staying out of a recession. Then when you looked at the sentiment, the VIX easily below 20. So that's a bullish sign. It gets a check mark for the fundamentals, for the sentiment. And then the technicals, the fact that we broke above that long-term resistance level and then it tested that and then acted as support lets the technicals get a big fat check mark as well. So all three check marks on the board today. The S&P 500 is a bank it stock for us heading into 2020. So now that we've got our full analysis on the S&P 500 and we know what to expect for that going into 2020, I mentioned that I had a new segment today called my quick takes. So I wanted to run through several of those stocks that you all have left in the comment section below my videos, and I ask that you continue to send comments about the stocks that you want me to feature, because I'm going to make this a routine thing where every month or so we're going to look at some of the quick takes on stocks that you all have commented on, but I haven't had a chance yet to do a full bank it or tank it on. But down the road, I plan on doing a bank it or tank it on all these stocks that you all are interested in. So for today, though, we're going to run through my quick takes on several of these stocks just to give you an idea of whether or not I think that you should bank on these stocks now or they're stocks that you can tank and ignore for the moment. All right, our first question comes from Goldstock82. He asked me about my comments on Ceragon Networks, ticker CRNT. And I don't like this stock after the drop that it saw in November. It broke through a major support level. And even though shares trade under $2 already, it can head much, much lower. So this is a stock that I would avoid, and it's going to end up on our tank it list for today. Then Jeff, he's looking for some analysis on Kirkland Lake Gold, ticker KL. So I want to look deeper into Kirkland Lake because it does look interesting at this level. And I believe gold prices are going to head higher in 2020. And that's going to help elevate stocks that are related to gold like Kirkland Lake. So I believe this is a stock that's going to break through a resistance that's around $50 a share and continue to head higher. So that's a stock that you can bank on today. And then Brent, he wanted to hear about GameStop with the ticker symbol GME. And oh man, really don't like this stock. Just from a fundamental personal perspective, I'm a consumer, I have kids, we buy video games, and I never go in a GameStop store. We used to when we were first getting into this, but we figured out that they were way overpriced on everything from controllers to video game consoles, just everything related to the gaming environment. They cannot compete on price. And they're an old company that relies on foot traffic, and they're a brick and mortar presence. They don't have much of an online presence. So they're really struggling to adapt, and they've tried to do different things, but I don't see the stock turning around. So it's a stock that's going to stay on our tank it list for now until they really start to show something of a turnaround that's actually going to work for them. Now, Steven, he wanted my thoughts on Macys and Cincinnati Bell, and those are both two great stocks. So let's tackle Macys first with the ticker M. Now, Macys, it's another brick and mortar store that I can't recommend at the moment. This is a company that they don't have a serious online presence. They're still, focused just on foot traffic coming into malls and their single standalone locations. So this is another company that's basically turned into a real estate stock. So until they have some sort of turnaround, I just simply can't recommend them. So they're going to stay on our tank it list for now. And then Cincinnati Bell, they trade under the symbol CBB. And I can easily see this stock hitting $10, $11 a share by the end of 2020. It's breaking out of a major downtrend that it was stuck in. So we saw the stock push higher. That was great to see. And I'd like to see it buy it maybe on a pullback below $6.50 or so after this rally, because it's going to take, some people are going to take some profits. It's going to go through a little bit of a pullback, but then I see shares rallying throughout the end of 2020, hitting $10 or $11 a share. So there's a great opportunity in that stock. So it ends up on our bank it list for today. And then our last stock, James asked about Boeing, ticker symbol BA. And look, I know many people own Boeing for a long time and they think maybe it's too big to fail, right? This is a stock that's going to go higher. They're going to rebound. They're going to get this plane back on the road. But for now, that plane, which is a death trap of a plane, has yet to get back out on the runways. So I think this is a stock. It's been consolidating recently and now it's starting to break down a little bit on its price patterns. I think shares are headed lower. So Boeing's going to be on our tank it list for today until we see something a little bit better. But for now, I believe this is a stock that's struggling. It's going to head a lot lower from where it is currently trading. So that's all for my quick takes today. And I know I didn't get into everybody's comments that you've left with all these different stocks. And look, I really love seeing all your comments come in, and I'm going to feature them in the coming weeks. And we're going to do individual bank it or take it on some of the stocks that I even mentioned today. We're going to dive deeper into some of those so that way we can break down everything from the fundamentals to the sentiment and to dive deeper into the technicals. These are just my quick takes to give you some insights in the stocks that you're concerned about or looking forward to hearing me talk about. But I noticed several of you mentioned several stocks that are related to the cannabis sector, the marijuana sector. And I know that's a hot topic right now. So I'm going to reach out to Anthony Planis, who is our in-house expert on these sectors. I've been talking to him, and I think it'll be a great idea to bring him on and to do a bank it or tank it with him, where me and him can both dive into the fundamentals, the sentiment, and the technicals on several of these marijuana and cannabis related companies, because he's the one that really knows all about that, and I can help add my 2 cents on some of the things that I'll look at, but he'll be able to really dive into these companies and where they stand in the overall midst of this new, basically green sector, and how things are going to trend for them going ahead. So I'll be really excited to feature him in 2020. Early on, I'll be able to bring him onto the Bank It or Tank It, and we'll start to go through some of these stocks that you all have recommended in those videos. So if you haven't checked Anthony out yet, though, I'll have a link below this video. Make sure you check him out. He knows everything about this sector. He's an expert on that. He also knows a little bit about everything related to commodities. So he's got a great YouTube channel. So just scroll below and check out his YouTube, and you can see what it's all about. So that's all for my video today. With the holidays just around the corner, I wanted to wish everyone a Merry Christmas and a Happy Holidays. Look, I'm not going to do another Bank It or Tank It until we're in 2020. So this is the last one for this year. And I hope you found these very insightful and very helpful. And again, just leave me a comment below. Don't forget to subscribe so that way you don't miss out. I hope you enjoy your time with your family and friends over the holidays. I know I'll be heading up to North Carolina with my family to see the rest of our family and friends that live there, that are back home for us. And we're also going to head up to West Virginia and hit up to ski slopes. We're going to take our kids skiing and snowboarding for the first time. So that'll be fun and exciting for us. And if you want to check out some of the pics or videos that I may have from that, then be sure to follow me on Twitter at @ChadShoopGuru. You can keep up with my social life a little bit and some of the things that I do with my kids, but also I give my off-the-cuff comments on the markets and on stocks and things that are going on in real time. So don't forget to scroll below this video to check out all the additional videos and content, along with my #1 strategy for investing in 2020. So be sure to check out those links that are below this video, so that way you can dive more into what to expect in 2020 and beyond. So thanks for tuning in today. Until next time, I'm Chad Shoop.